I'm Bonnie Quinn, and this is Bloomberg Markets. Time now for Futures in Focus. Oil is falling as the Saudis insist politics will not interfere with the country's oil production. Let's get over to Larry Shover at SFG Alternatives. He is at the CME for us. Larry, 68.64 right now on a barrel of WTI. If anything, we are losing ground. Has the market taken into account what might happen in the next week or two with Saudi Arabia?
Yeah, when you consider last week a new low point in relations and oil drops, and we have 4 weeks in a row of stocks rising according to EIA data, and I think people are spooked by the whole prospect of demand, and that's something I've been talking about for a long time, considering we had a $12 rally between August and September on things that really didn't come to fruition. So I think the market, we think it's a huge sell-off, but I think it's just we're down back to reality again, considering demand growth is going to be stunted. When you have the strength of the dollar with emerging market currencies, I mean, oil is well over $100 a barrel in many emerging market countries. Not to mention, we're seeing more supply come in from the very countries that we didn't think were going to make up the slack. And lastly, consensus thinks that fourth quarter we're going to be half a million barrels deficit. That's not high on a historical basis, especially when you consider 2013 and 2017, we were well oversupplied.
Could Saudi upend your whole thesis, though, should it decide that it's going to go on the offensive?
Well, it always could, but at this point, I think that's a huge outlier, and I don't think the market is counting on that either, especially when you consider we had the second largest long liquidation of futures contracts the week ending last week, next to what happened in July and February.
What about the US dollar? We're seeing a little strength this week, Larry. We're close to 96 on the DXY. Is that a dollar story, or is this, to the chagrin of other currencies which are weaker?
Yeah, well, I think it's right now, FX trading, it's not the conventional playbook of reserve versus high beta outperformance. It's more individual basis. I mean, look at dollar-euro down 1% over 5 days, dollar-British pound down 1.5%, really on political. U.S. exceptionalism, kind of off the boil compared to where it was a month ago, but I do think it will continue to outperform just because of risk off and because equity markets are not outperforming right now. So I think the exceptionalism is still there, but not as much as it was even a month ago.
All right, Larry Shover of SFG Alternatives at the CME for us for Futures in Focus. Thank you.